Thank you very much. Good afternoon, everybody. Let me share my screen. I have a presentation that I want to show you, and I want to make sure that you reach it. Please let me know if you can see this in full screen. Can you see this?
Да, мы видим, господин Stratta.
Very good. So I was asked to talk about how to attract foreign investment and private finance to achieve the SDGs. And I want to go through a few items here that I think are relevant. This is a very long, very broad area. So I decided to pick a few examples that you will perhaps find useful about impact investment, about blended financing, about results-based financing, and finally, some recommendations for the government. Going to the investment landscape, this is the most important starting point for this. Since the SDGs started in 2015, there were already estimations that the SDGs will not be achieved with public finance only. And it was understood, and some estimations were made, of the volume of private finance that would be necessary to achieve them. Private financing gap was estimated in the vicinity of $2.5 trillion of additional finance per year in developing countries. And the share participation of private finance in these 2.5 can go from 0.9 to $1.8 trillion to bridge the gap. Again, I want to highlight these estimates show additional private investment and finance per year that should happen in the developing countries. So these are unprecedented levels of private finance. Uzbekistan is moving in the right direction, and this government's strategy is focusing very clearly on opening the market for private investment, for developing private investment and private markets, and transfer the degree of leadership from the government control to more a market control approach. If we look, and the first area where we should look at when we talk about how to mobilize more private financing and more private investment in Uzbekistan is to begin to see how the country performs compared to other countries in the region and other competitor countries to attract private investment. So looking at the World Bank and United Nations indicators, we can see the countries ranked in different areas regarding their performance on the Doing Business score by the World Bank, where you can see on the top left, the country performs fairly well compared to the media of the region, although there are some areas like resolving insolvency and protecting minority investors that are very important for private investment, where the country can perform better. When private enterprises are asked in the surveys that the World Bank carry out, on the right side of this slide, you will see that for the private sector, the problems are different. The tax rates, the informality, the cost of and availability of electricity, access to finance, and other elements come out as very important. And if you look at selected indicators from different sources, the country can do much better in some areas like corruption, human capital, and so forth, which are all factors that affect, in a way, the performance and the attractiveness of the country for private sector investment. So the first block of ideas that I wanted to share is that this is the background. With these things in mind, is that the private investors may come and invest. Now, if we look at the particular areas where Uzbekistan can perform, where are these investors? The market of investors that could come to invest in Uzbekistan is quite broad. And if you look at them from a perspective on what are their current practices, how much do they care about sustainable development, the diagram here shows that there are different types of categories. On the left side of this categorization, you have the firms who only look at their financial returns. The firms that don't care about environmental, social, or governance practice, they do care about the bottom line of the business. Now, this is a segment of the investor market that is reducing because of the SDG trend generated less and less space for them to operate. However, this is an area where the mining companies are, many of the mining companies belong to, which is one of the areas where Uzbekistan could be interested in attracting investors. So attracting people who will invest for mining operations and at the same time contaminate the water and the environment forever may or may not be the best possible choice the country wants to take. So once you move to the right side of this diagram, you will see that there are other type of investors that are interested in mitigating their negative impacts, trying to do no harm. And moving more to the right, you have a significant number of investors who are more interested not only in do no harm, but also try to develop impacts, environmental, social, and economic impacts for the economy. Now, this area that starts in the green side here is what is called the impact investor market. And to show you a little bit more about this is a market that is growing very fast. These are not totally updated statistics that I have here, but the market was growing to $502 billion in 2019. In 2020, it went to 715. This exponential growth, it's applied to a number of areas: education, energy, healthcare, microfinance, housing, etc. But if you see on the bottom right diagram there, these impact investment flows do not come that much to Central Asia. You see that in the chart here, the Eastern Europe, Russia, and Central Asia combined were the destination for only 2% of these flows. So something happens. These flows don't come spontaneously because the countries may not have an adequate ecosystem of policies to attract them. And this is something that the country may want to develop from a strategic perspective. This market is growing. I will show a couple of examples where impact investors may come to Uzbekistan. One of them is by continuing the practice that the country started last year for emitting sovereign thematic bonds. Last year, Uzbekistan issued, and it was one of the first countries in the world that issued an SDG bond in the London Stock Exchange. The purchasers of these bonds are impact investors, are people who want to balance their economic return expectations with the impact expectations that these thematic bonds are proposing. As we are talking now on climate and environmental financing, I wanted to go a little bit on the issue of green bonds, which is perhaps the thematic bond of choice when we talk about this particular financing area. This is a bond like any other, if it is public or private. It could be a private bond issued by private companies or by private investors. The main characteristics is that the product, should be applied to green activities, and these activities will be measured. And these bonds will generate two means of generating default. You can default if you do not pay back the bond debt that you are acquiring, and you default if you're not providing the impact that you promised with the issue of the bond. So here there are a number of things that are regulatory, legal, and so, but I also wanted to share some graphic visualization on how this market is growing very fast elsewhere. Again, the participation of our region is relatively small, Central Asian, and this is an instrument that is picking up by a variety of different issuers. And I think this can be a way to go for Uzbekistan in the near future, especially because there are a number of areas where these bonds can be applied to. The subject of the investments can be applied to energy, renewable energy generation, green transportation, water and sanitation investments, green buildings, industry, waste, etc. So there are a number of areas for which certification criteria has been developed or is being developing. And the country has a variety of these in the national strategy for 2022-2026. So maybe sovereign and private bond issuing could be an instrument that the country wants to put forward, taking into account that there is a certain degree of complexity and also a certain degree of greenness in green bonds. Not everything has the same shade of green, and the shade of green attracts different types and proposes different deals for the issuer. So in a number of these areas, when the bonds are analyzed, the countries have different performances in their certification areas. However, green bonds could be a way forward, or thematic bonds in general. The other area that I wanted to put a few examples for you to think about has to do with climate smart low carbon PPPs. The country has a very wide agenda for PPP development, for infrastructure development. The ambition is very high. The country has very high targets in this 2022-2026 program. But then there is a segment of these PPPs that could be very interesting for Uzbekistan to use them to attract impact investors. In this case, investors are interested in investing in these areas where the impact has also different means and can be applied to a variety of areas. For these climate smart low carbon PPPs, the government may need to develop new modalities like climate smart PPP contracts, where additional considerations are taken into account to traditional PPPs. Some countries develop particular instruments like green investment banks to focus the specialization on this particular type of instruments. and so on. So you see, taking this as a particular target will trigger a number of policy decisions that the country may want to look at. And just to show you, again, the level of complexity that the country may want to deal with, the big graphic on the right side shows the typical composition of the financing mix of one of these climate smart PPPs. So from the total package, the PPP company will have to have a portion that is equity, a portion that is debt. From the debt, as a part of it is international debt, a part of it should happen at the local level. You have development finance institutions participation, public sector financing, commercial financing, and so forth. So once you look at these more closely, you will begin to see that a number of things should happen for these instruments to prosper and to happen. So this is one of the areas that I wanted to show. There are many instruments the country can develop to attract impact investors. There is another way of attracting impact investments, which is not by the type of financing, but by the type of structuring approaches the country wants to do just to generate opportunities to attract impact investors. So blended financing is one of these instruments where the country can combine concessional financing from development finance, cooperation partners, or even from public funding that the government has available to de-risk the participation of private capital that can be domestic or foreign to finance SDG-oriented actions. The private capital that is attracted is not necessarily impact investors. It can be any type of private capital, but these instruments are used also mainly by impact investment companies and funds. Now, again, just to show you a little metrics on how blended financing is performing, the levels of assets mobilized by these instruments is lower than the ones I mentioned before on impact investment. In this case, they're oscillating around $15 billion a year. You see also that the participation of Europe and Central Asia is very small, is very reduced compared to other regions. These instruments were designed initially to de-risk investments in Africa, in sub-Saharan Africa, and as they succeeded very much, their usage expands to other regions, but in our region, it didn't expand that much. When it comes to application of this instrument, you will see a number of the areas that are listed here also correspond directly to the main interests of the country in the national strategy for 2022-2026. You see energy, agriculture, infrastructure, health, education. A number of these things are already prioritized. And when you look at the type of investors who participate in these blended financing mechanisms, you will see a lot of familiar names here, familiar to Uzbekistan. On the left side, you see that a number of development partners, development agencies are specialized in this, like USAID, the AFD, the French Cooperation Agency, the EC, etc. So there are a number of development agencies that are specialized in this. Most of the multilateral development banks are specialized in using these instruments. There are also blended financing mechanisms that apply to philanthropic areas for social investment. I will show some examples at the end of this presentation. So the blended financing mechanisms are used to attract philanthropic, non-for-profit investors, but non-for-profit, but they are investors. They want to recuperate their investments. And also a number of private for-profit investors, impact or not. Therefore, once you look at this map, you will begin to see that Uzbekistan may have some of these as partners already, and those who are not here may want to generate initiatives to attract them, right? When it comes to instruments, you will basically see these things materializing in the country in the shape of large facilities, if there is a market for them, or funds. And the structuring of the funds on the right side of this diagram, you will see what is used from donors or from government is to take the green side in these funds, the lower side, the junior side, the one that takes the first loss in these funds, to allow other participants to invest. In a number of countries, these instruments are being developed for SDG financing to attract pension funds, public and private pension funds. So the de-risking occurs to allow pension funds to invest their large capital in areas that the government is interested, but also allowing them to fulfill their fiduciary duties. I don't want to go too much into detail in this, but again, if you see the expected application areas of blended financing, you will see that all of these areas are in the government strategy priority. So in food, agriculture, energy, materials, health, and well-being, a number of the atypical applications of blended financing do match with the government priorities for the next 5 years. So what I would do will be to look at these examples in these applications, look at the partners who are participating in some particular areas and try to attract them to invest. Finally, I put some examples also. I mentioned before the social impact investment areas, because impact investment can be attracted to fulfill social purposes. And for this, the government has to be able to develop the capacity to generate social PPPs or to generate opportunities for private social investment to happen. So in order to do this, the governments have to develop an ecosystem of policies that allow these transactions to happen. On the demand side, the government must provide policies that allow impact-driven organizations to prosper and to be able to develop these projects that are going to be financed. And on the supply side, there is a need to attract impact investment fund managers, social banks, intermediaries, and a number of different participants that should be allowed and have incentives to come to the country and develop some of these instruments that are in the middle, where you see the most well-known social investment instruments are in the center, this diagram, because the social impact bonds and the development impact bonds, for which the country has done some experiments as well. But there are many other potential instruments that the government may want to explore when the time comes. In this type of areas, the best and the most well-known approach is the one of the results-based financing approach from the government side. So in this diagram, the government becomes a buyer of results. The government pays for a project's impact and hires some sort of company that will provide these results and get their own financing under their own risk. normally the government will not pay for the results until a third party, a validation agency, does not verify the results. And then after an independent verification, the government pays. Basically, here, the government has a contract with the social PPP provider and pays only when the results on the agreement have been fulfilled and verified by a third party. And this executor of the PPP must find appropriate ways to pre-finance their activities to produce the results to get paid back. The concept is fairly simple. However, the implementation of the complex can lead to very complex schemes like this one. Don't be too scared. This perhaps is the most complex way of developing a social impact bond with a variety of participants. But I deliberately use this example for you to see that it is a very interesting but potentially complex type of financing agreement for which the government may want to develop the proper capacities to manage them. This is also an instrument that is being used in a variety of areas. And normally when the demand is not large enough for individual social impact bond financiers or the stock market per se, then the countries need to develop some sort of wholesaler retailer approach where one particular impact investment bond fund must be created to finance a variety of these results-based financing social impact or social investment instruments. So you see, in these four areas, I try to show that there is a large variety of non-traditional areas where the government may want to explore to attract more investment. More traditional investment, I did not specifically went into attracting foreign direct investment, traditional foreign direct investment, because this is an area where the government already has expertise, targets, is working on, and it actually abides by the traditional rules of the conditions of the market, the attractiveness of the market, and so. But the government of Uzbekistan has tried with free trade zones, a number of instruments that many countries are doing. But if you want to enter into more green specific financing or more innovative financing approaches, then the first recommendation I will do to the government is that a strategy is needed. These things will not happen in isolation, will not normally happen spontaneously. You may have a particular demonstrative small project happening just because a development partner helped the government to develop one fund, one bond or so. But if the government wants to really benefit from this, the government needs to have a strategic approach because a number of policies that are complementary must be aligned to make these things happen. The other main element that is very important in Uzbekistan is to focus on removing the binding constraints for overall private investment. Doesn't matter if it is impact or not, or if it is green or not. But the main issues that are hindering the investment, especially from abroad, regards with infrastructure, well-known causes that are addressed in the government current strategy, but refreshing them is I think, necessary. Infrastructure binding constraints, the market-friendly reforms the government is promising should happen, access to finance, especially in the domestic market, the informality of the domestic market and the lack of competition, or the difficulties for competition between tax-paying companies. Corruption, which is one of the elements that is hindering somehow some types of investors to come. So the second point would be to focus on systematically reducing the weight of these binding constraints to allow other investors to come. And thirdly, my best recommendation would be that the government needs to prove these concepts, to test these things. So apart from a strategy, it's also needed to strategically begin to use the resources that the government has, or that the international cooperation can provide, even public debt, to engage, to test these ideas. And once you test them, you can assess how much leverage you can get. For example, the test the government did in the London Stock Exchange last year with a thematic bond, it's a very good example. So if we didn't have that concept proof, we could still be talking about the convenience of having a thematic bond without knowing how much volume, how much oversubscription such a bond can have, an idea of what is the temperature of the markets regarding interventions like this one. So I finish here saying that basically these three things, amongst many others, could be perhaps the most interesting things for us to reflect. And I stop here, and I am very happy to answer any questions that you may have from these ideas in this presentation. Thank you for the attention.
Спасибо большое, господин Страта, за очень интересную, такую обширную, содержательную презентацию. Коллеги, если у вас есть вопросы, пожалуйста, можете задать. И коллеги, участники, которые онлайн присоединились, тоже, пожалуйста. Да, пожалуйста.
So good afternoon, Mr. Stratta. Thanks for your presentation. So the interesting instrument is blended financing. So as I understood, for the blended financing, we can attract a debt from multilateral or bilateral, based on the multilateral or bilateral agreements, and from another part from private sector, from financial market, right? So without putting our money, this is one of the ways, right? And my point is that, okay, in order to implement SDGs, we can raise fund by through instrument blended financing. But the question lies in terms of returning the debt. So if you raise the huge amount of fund, because for nowadays we have not enough money to finance it, as you also showed in your presentation. The main question lies on the repayment of this debt. So what you suggest, maybe only some goals of SDG may be financed by blended financing tool, or so for all we can use. Yeah.
Thank you very much for the question. Indeed, blended financing does not apply to all the SDGs. You can use them only in those where the investments that are made can produce financial returns, right? So you are using the scarce resources from government money to leverage additional private financing for the areas that you will have invested government resources first. For example, if you wanted to invest in microfinance to private sector microfinance companies, right? You can do this by allocating $100 million from the government budget and lend through the banks. And if they pay back, they pay. And if they don't pay back, you have a problem, right? That's one way. The other way is to say, I want $100 million to microfinance, but I will only allocate 10 million from government money to take the first loss if the $100 million instrument does not work and somebody does not pay. So somebody else will finance the other 90 because you de-risked their participation and they have a commercial expectation to make money. Normally, this junior side of the blended finance mechanisms can be taken not just by the government, also it is normally done with instruments available from development partners. The European Union has instruments of guarantees, the World Bank, IFC, the Asian Development Bank. So a number of development partners that are in Uzbekistan, they know about blended financing, and they will most likely partner with the government in these experiments. So you, instead of allocating 100 million, you allocate 10, but you still have the 100 million mobilized. And then you try to multiply your own scarce resources to try to do this as many times as you can. But there are a number of areas in renewable energy, if you are opening the market for private sector investments, in microfinance, as I said, in even thematic areas like gender, you do blended funds for, loans, etc. Nameless. I showed a diagram where you could see there are many applications. The tricky part is that it takes the government normally out of their comfort zone, because this is something you have not done yet before, and maybe it requires a different type of usage of the government funds. And that is perhaps more cultural than technical. And it's an issue that has to be discussed somehow at a strategic level, but then you may easily find many ways of implementing in your country, I think.
Thank you.
You're welcome.
Пожалуйста, Бекзат, пожалуйста.
Hi, I have a question for you. I actually have two questions. The first question is just very straightforward and simple. It's basically why issue a green bond? I mean, why not tap into the capital market and raise a fund to finance any green projects? I mean, what's the purpose of issuing a green bond, and what outcomes would be getting from these bonds? Actually, it's my first question. And second question is, from your point of view, what do you think on which sectors of energy sectors of Uzbekistan has the weakness and should be issuing more green bonds to develop that sector? Thank you.
Thank you. The instrument itself, the green bond, can be first sovereign from the government or private, right? And it's been used in both ways around the world. Now, the benefits in both cases are firstly because we are trying to target with these instruments impact investors, which are investors that are prepared to balance their expectations on returns with the impacts that the instruments are generating. So, for example, you have insurance companies in Europe that are mandated to invest in green projects, and they are expecting to get lower returns because they have to do that. Companies like Allianz in Europe, the largest insurance company in Europe, has to invest 25% of the portfolio in green projects, for example. Now, if you issue a normal sovereign bond in the stock exchange market, you have the typical factors that determine what is the type of proceeds that you can use, and also the interest rates that you will get. And this regards to the country risk, etc., right? The currency, the terms, the conditions of the bond. You can expect when the bond is green that these terms will be either more convenient, you can try to get longer terms, or lower interest rates. So you can combine this to reprofile your debt compared to traditional debt. The companies or the banks, the private banks, are doing this again to get access to cheap capital. You know, normally in countries where the private sector is more developed, private banks will go to the stock exchange locally or internationally, issue a green bond, access to cheap capital, and then open a green line of credit to their customers, and somehow transfer this lower capital cost to their customers. So there is quite a lot of commercial banks that are issuing green bonds and also profiting by doing that. The banks always charge their own costs to that. And finally, some private non-banking institutions are developing specific purpose vehicles for issuing bonds to finance companies directly. For example, in my firm, we are making a first portfolio of 3 Costa Rican firms that go together to the stock market to issue a large-scale bond that will attract impact investors from abroad that will come directly to finance a private company through the stock exchange. So their access to the cost is the very minimum that the country can allow. And in this case, the companies benefit from not even having banks as intermediaries. So there's a variety of ways that you can do this, and the benefits are balanced. And with all the SDG instruments, we have the expectation of getting slightly better conditions than the country would get otherwise.
And my last question, actually.
The weaknesses.
No, the weaknesses, yeah.
Yes, sorry, I forgot about that. And the weaknesses are in reality an opportunity in the country, because you have these areas that are severely affected by climate change, where, you know, water, access to water, sanitation, puts the country in tight spots. That is one of the best things for impact investors. And I mean, you can see these weaknesses, as you call them, as areas of opportunity. If the country wants to expand forestation projects or any kind of green generation, green energy generation, and so on, to balance the problem of electricity, access to electricity, if you want to turn around this weakness into a strength, these type of areas are some of the best for attracting this specific kind of investors, right? So you can actually turn the weakness into an opportunity area, try to turn that and target these investors to come invest in the country, because some people want to do this specifically for carbon purposes. You know, some people are looking at the decarbonization of transportation and so on. So if you are doing these things, you may have very narrow targeted potential investors who would come, provided that Uzbekistan is a safe place to invest, which is my first set of slides, right? But provided that that is happening, you can turn the weaknesses actually into an area of opportunity. And for me, I am very optimistic about that in Uzbekistan. I think that can be done.